Hi, this is Jack from Alpha Charts with a state of the market video. Today is May 1st, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so before we get started, I just wanted to share with you one thing. It's from the TraderLion group, if you're not familiar with them. Um, they just came out with a new course called Leadership Blueprints. Just kind of caught my attention, so I just wanted to show it. It's TraderLion is led by Ross Haber. If you know Ross Haber, he worked with William O'Neill and Mike Webster for a long time, and basically TraderLion is an education group, and they also have other top 10 stuff, whatever that I use. But again, this is new for them, so it looks interesting. It looks like something that may shorten the learning curve, especially if you're starting out or if you're intermediate type trader. So it's something that I'm probably going to take this course, and just want to kind of share that. And Yeah, so that's that. I'll go ahead and link to this in the description down below. I don't make any money off of it or anything like that, so don't think that. But I think that this looks pretty good. So again, I'm gonna take it. Actually, I'm gonna have my daughter take it with me. I have a 16-year-old daughter. She's gonna take it with me because I want to get her into trading. And I thought this was kind of the a neat way for to do it where it's not coming from dad. So anyway, so that's that. Let's get back to the markets. SPX, as we usually do, and we had the breakout, and this week it's just another week that's sideways action, right? I mean, when you look at on a weekly basis, you know 3 weeks now we've closed basically in the same spot. So couldn't go down, couldn't break out. So it's it's just sideways grind. Market's frustrating sometimes. Looking at the Qs, this one again matches a little bit closer to what I do. Breakout, retest, and now if this is a cup and handle, maybe it's not. I don't know. The 23-day is catching up now fairly quickly. It's only a few percentages away, only 1% away. So that's real interesting right there, right? So that's kind of nice to see in the Qs. Maybe a little bit of distribution in this handle. I would have liked to see maybe a little bit more accumulation, but again, price isn't breaking down, and I think that's a positive after a pretty good run. What was that, 20% or so from the bottom here? Ran up. Oh, okay, that's 20. Went up 11.5%, and now it's gone sideways. We'll see. Looking at the equal weight, though, to give us a little more context, RSP, which is equal weight S&Ps, you see that one is still in a nice uptrend, and the Qs equal weight, that one's a little bit more interesting. Look, more of a traditional cup and handle with it kind of coming back. Decent volume, though, so that's something to be aware of, sitting right at the 23-day. What does that mean? That means that the larger weighted companies are carrying the index a little bit. So something just to be aware of there. And by the way, this blue line, I put the 50-day on here just to give some context also. So that's my 23-day EMA. That's my 50-day SMA. SMA, right? Just make sure. Yeah, SMA. So yeah, so far hasn't done anything wrong. A little bit of that distribution volume on the equal weight Qs. So next week will be a big week, right? Looking at the small caps, really has just grinded higher for 3 months now, February, March, and April. And you can see that because the moving averages are starting to flatten out. Again, not, it just shows that it's grind. It hasn't done anything wrong. I think this general area right here, even going all the way down to 205, but this general area is the important one, and it's holding above it, just going sideways, frustrating people, chopping them up, right? If you're in options, burning premium, it's just not a fun trading environment right now. Looking at the individual important ETFs, SMH, which is the semiconductors. So this trend line, which I've had on here for now, quite a few weeks, looks like it may be coming back into play. You have price has come down to the flat 50-day, and now you have the trend line right there too. So that is going to be the important area. We'll call it 240-ish. So we'll see if price bounces above 240, or if price breaks down below the trend line. I think if price breaks down below the trend line, I think it's definitely a negative sign for the market, with semis being so important and everyone making a big deal about the semiconductor shortage. And who knows if that's, how much hype that is, how much real that is. But if and how much is priced in, but a breakdown below the trend line and below the 50-day, that gets me a lot more defensive and makes me rethink my feelings about this market. XLF on the other hand continues to just scream higher after this breakout, and we talked about, going down back to a weekly, how important that area was, how many times it tried it right there, and it continues to act very, very well. And IYG is the one that I like in there, and that's even stronger. Those are the big boys, right? JP Morgan, Bank of America, Goldman Sachs, all those guys, American Express. And again, they keep screaming higher too. So XLF is doing well, financials are doing well, and that bodes well for the market. Again, I'm using this as an indicator, and I think that's a positive for the market for financials to do well. Looking at lumber, everyone's talking about lumber that, oh my God, it's too high, it's too high. Again, using it as an indicator, it has just kind of consolidated these gains, just moved sideways so far. So lumber going out at multi-year highs. Is that all-time highs? Yeah, all-time highs. Lumber going out at all-time highs is not so much a negative. I mean, it's just there's demand and there's people working and there's the economy is good and things are okay. So I think that's a positive. Nothing negative to see in lumber. Moving on to let's do bonds. Switch to a line chart. Get rid of this volume. All right. So the credit markets, to me, continue to just trend down. Very, very bullish look to it. Every time that they want to spike up, they get knocked back down, right? Every time they try to pierce through the moving averages, they get knocked back down. And it happened again. So, and we've seen these consolidation periods before. They happen every so often, right? Especially more recently. So credit and bond spreads are saying that everything is okay, and I don't think there's any imminent, damage happening to the market right now, or negative happening to the market. We're not seeing things that look like this, right? This looks nothing like this. So I think overall the market is healthy as far as credit goes. Looking forward to let's look at VIX. Yeah, so the VIX, again, this is the VIX of the S&P, and you see it made a higher high here. Okay. But it's still at 18.6. Nothing that's, screaming there's a problem. Again, we're not seeing these types of spikes, or this type of spike, or that type of spike. That would get me much more cautious. And so yeah, nothing to see here yet, at least. It just shows that there's been some, near-term volatility. And yeah, so the VIX is still tame, right? Nothing much going on there. Looking at the value line geometric index. So the value line geometric index, again, looks fine, near all-time highs. there is a divergence that is still showing up on it, right? So this is a breadth study, value line geometric index, breadth indicator that I use. And it keeps going up, yet momentum is waning. What does that mean? Well, it may mean nothing, right? Because there's a lot of momentum divergences that show up. Like right here, it went basically sideways. There was a momentum divergence, right? And what happened? It resolved to the upside and got rid of that divergence. And then you could say there was another one here, right? You could even say you like this, right? And then boom, it breaks right out. So I don't put a ton of weight in this, but I am aware of it, that if things start to break down, could it come back and test, 595, 600? Sure, why not? Right? That'd be totally within the character of the market. So just something to be aware of. But right now, breadth is okay. Nothing near all-time highs. Nothing I really I'm too worried about. And looking at the put call ratio. Okay, so this is the equity only put call ratio. So this removes the people that are hedging with indexes and things of that nature. It's just what people are doing with equities. And interesting development this week. We had people that got very bullish and all of a sudden turned very bearish. Well, not very bearish, but turned a lot more bearish than they've been in a long time. So what does that mean? This is really only a great indicator when it is at an extreme fear. But it does show where the trader's head is right now. And right now, they got 1 foot in the door, 1 foot out the door. They don't know, they're very quick to sell and turn bearish. So we'll love in some respects to see this move more into this area and show some fear or even extreme fear. And that would probably mean that the market is ready to go back up if it gets back up here. Right now, it does show that that they're 1 foot in the door, 1 foot. They'll be real quick to get out. It shows, so that's kind of interesting. And looking at the fear greed index, it's at a 56, right? You see, it's very near the neutral area. It pretty much says exactly what I said. 1 foot in the door, 1 foot out the door, type of scenario. All right. Gold, I'll just stop by it real quick. Yeah, not doing anything really. Gold miners, I thought may have had a chance to run. Nope, they came right back down. So not much to see there. Looking at one more MMFI, let's look at the percentage stocks above the 50-day moving average, and it started to recover and then it rolled over a little bit, but we'll see what happens here. We'll see if it makes a higher low here or if it rolls over. This would be another good breadth indicator, told me strength of the market. So there we go. So let's sum it all up for you. Overall, the market's done nothing wrong. It still says it's strong, still says everything's okay. Everything is pretty much at or near highs. There's always going to be some doubt in the market. I mean, the way it looks like to me right now, as of today, it looks like the market is just digesting gains. It does not look like a major top or catastrophe is coming tomorrow or anything like that. I could be wrong, but it looks like this is just part of an uptrend or a frustration period for the market. And I think the 10-year is the key right here, by the way. I should have showed this earlier, but that's fine. Here's the 10-year. And so you'll see this was an important area, and going to the weekly chart, you see it's been an important area, right? So tested, broke through, came back. We'll count this as a retest. I do, at least. That's probably the retest right there. And now what happens? No one knows. I can say that the market tends to be in trouble when there's a surprise to the upside. So look here, this went up, that was 56%. And even when these big moves to the upside, I think those are the problems. So nice, meandering, choppy move to the upside. The market could digest those in small bites, no problem. A very big move to the upside, and I think that's where we get problems. So, does does that happen? Does it not happen? I don't know, but I think the 10-year yield is something to watch, and you see a velocity move to the upside on a closing basis. I think that would could be a sign of market trouble. Right now, we don't see that. It's just moving sideways like the market, and I think overall that's fine. Rates are still low. There isn't that much trouble. A spike up to 3 real fast, or even I'm sorry, even 2, but really to get to 3, that would be trouble, right? So 2 would be the next stop that you'd look for some kind of consolidation, and then 3-ish. Um, Again, as an indicator, not that I'm trading bonds, but as an indicator of market health, I think that's the part that would scare the market. All right, so that's what I got for you today. Market's still looking okay. The big boy earnings are out of the way, right? We got all the mega caps done. This week is actually a pretty heavy earnings week too, with a lot of the growth names, a lot of the software names showing this week. So I don't think we're out of the woods yet, but maybe that's what this is doing, kind of biding its time to get earnings out of the way, and then hopefully we can move higher. This 50-day is still rising, and as we move forward, if price stays up here, we'll be knocking out some of these and some of these, and it should start to turn up even more. All right, so just to be aware of that. Hope you guys have a good day out there. If you like this type of content, please like and subscribe to my channel. I appreciate that. You can find me on Twitter at AlphaCharts365. I'll link to the TraderLion information down below. So you guys, if you're interested, you can check it. And you'll have a great week and a great day today.